Okay, in the B part of this 1610 problem, it's very similar. It's just going to have a different result. Obviously, the van is going to be sold for $8,000 cash. Let's just kind of go through the process again as a review. We have that same van that's worth 36,500. So again, we want to get rid of that historic cost or that historic balance of the van. So that's going to be a credit to van for 36,500. And then the accumulated depreciation again is the same. So we'll just do accumulated depreciation, and that's going to be a debit of 28,000. All right, so again, we're in that spot where we've gotten rid of the old asset. We've gotten rid of the old asset off of our books, and now we get to what did we receive in return, and then ultimately finding out whether we gained or lost. So in this situation, we didn't receive $10,000 cash. We only received $8,000 cash, and you could probably already predict what's going to happen. We're going to go cash debit for 8,000, and now if we go ahead and add that up, we're at 36,500 on this side again on the credit side, and on the debit side now we are at $36,000. So now what happens is we're short on the debit side, okay, and so now we have to think of if our equity is a credit balance, if our capital and our equity is a credit balance, if we're going to have to debit because of this sale, it's going to have to be a loss on sale for $500 to make that even. Okay, so we'll make that. Okay, and again, the way I'm doing this is the way I usually do it. You might have your own strategy for this, but at the end of it all, what happens is we have a credit to van for 36,500. We have accumulated depreciation debit for 28,000. We have a cash debit for 8,000. We have a loss on sale for 500, and that's the accounting for this sale. Okay, so we did lose money on this, and that loss on sale account would be an expense. So it would be a deduction from the sale of this van. Again, we're probably not in the business of selling vans. It's just a van that we had, and that loss on sale would come off of the other income section of the income statement, and it would be a loss to that. The net effect of that $500 would be a loss to that. So we would save some money on taxes due to this loss that we've incurred.